Well, welcome back to the Canadian Virtual Sell Your Business Conference. We'll just give people a couple of minutes here just to get to the right screen. I know the other session is just finished, so thanks for each of you and all of you for being on here today. Panel is always great conversation. There's an opportunity for you to ask some questions and find out what's going on in the market from the experts that are here today. So just going to give people just another minute or so to just come on to the area here. Thanks, Sandra, for confirming the audio and video, so that's good. And also, if you have any questions for anybody on the panel, you can post them either in the event chat or in the stage chat, and I'm happy to moderate. Feel free to post any questions, any comments, if there's a shout out you want to do or whatever, happy to have it. Hopefully you've had a chance to check out our expo area as well, where there's some organizers, sponsors, and exhibitors that can help you within either a purchase or a sale, or perhaps you're part of the process along the way as well. And by the way, we do add another 10 minutes at the end of this, so you can head into the networking area and network with people that are still hanging out if you are so inclined. So in the meantime, I don't know if I introduced myself. My name is Marc Belaiche. I'm president of TorontoJobs.ca and TorontoEntrepreneurs.ca. And I'll introduce the panelists. Here we go. So Nunzio Presta, founder and CEO of buyandsellabusiness.com. Welcome, Nunzio. Nice to see you again.
Nice to see you as well, Marc. Thanks for having me.
No problem. So Nunzio, maybe we can, for people who don't know you or what you do, your website, perhaps you can talk a little bit about your website, your business.
Sure. Yeah, sure. So typical entrepreneurial story, was in university, had a small business that I was running that I wanted to exit from. And I was hit with all sorts of barriers. So I decided to jump in on the space and I uncovered some pretty cool trends. Already back in 2012, I was seeing the movement of entrepreneurship through acquisition, people wanting to buy existing businesses and moving away from the 9 to 5. I was seeing all sorts of traction with foreign investors wanting North American businesses for immigration reasons. And I also noticed a ton of people wanting to basically prioritize, the entrepreneurship through acquisition way more than the traditional entrepreneurship way of building something from scratch and risking it all. So with that said, I jumped in on the trends. I created a marketplace where buyers and sellers could connect with the main goal of creating as much exposure as possible for our sellers and trying to attract as many buyers as possible. Fast forward to today, we've done over $2 billion in connection value. We have over 40,000 and growing in our network, and we're loving what we do. So we're really trying to, be that voice for entrepreneurship through acquisition.
Excellent. Keith MacKenzie is co-founder Paratus Business Resources. Thanks, Keith. Welcome, and feel free to talk a little bit about your business and what you do and how you help people looking to buy or sell.
Sure, and thanks very much for having us here, Marc. So Paratus Business Resources is a bit of an offshoot of Chinook Business Advisory, which is an M&A firm in Victoria, British Columbia. We recognized a while ago that it was difficult for small business owners to sell their business. Their resources weren't there. The M&A space was sort of geared towards larger firms with very professionally set up businesses, but the smaller folks were getting left behind. So we spent the last year and a half developing some software to help those people exit and really trying to create a marketplace that's a little bit more transparent for those folks and a little bit more liquid. And that's where we're sitting today.
Terrific. Well, thanks, Keith. Morgan Tate is co-founder also of Paratus Business Resources. So Morgan, welcome. And maybe you can give some insight as to what you do and how you're involved and how you might differ from what Keith does as well.
Yeah, thanks, Marc, and appreciate being here. So like Keith mentioned, as an offshoot of Chinook, I started brainstorming with Keith and our other partner about Paratus and just offering an alternative solution for business owners that maybe didn't fit the traditional model of business brokerage as much. And we've just kind of been iterating and building a service that services more Main Street businesses. And our real ultimate goal is to flip the success rate of selling a business, which is currently quite low if you're doing it independently, 10, 20% to more that 80%, and just make it easier for Main Street business owners to exit and hit their retirement goals.
Great. So the panel is open to, we can go in a lot of different directions here, but, I come at it from a very, let's break it down to basics, because I know sometimes people throw out words M&A, and sometimes it might scare a seller, might not understand what that means, how they can help. Like, look, I'm just looking to sell my business. What does that mean? What do I do? So maybe you can Nunzio, let's take your perspective first about, kind of buy and sell at business.com, and, what someone can expect if they're looking to sell, like what they can do on the site, like how it works, how you connect with potential prospects. And maybe we can start with that, just the connection part of it, and then we'll walk through the deal and what that might look like.
Yeah, absolutely. I can definitely talk about, what we're seeing from the seller side. Right now, the average listing has a value of about $550,000. So it seems like for our site and our marketplace, it seems like it's stabilizing as far as the listing values. It was much higher a year ago. So looking back a year ago, sellers were really trying to salvage and maximize value from their pandemic impacted businesses. Some were looking for those Hail Mary exits. And this is industry agnostic. So multiples of EBITDA, for example, are always different and they vary. But in 2020, we were seeing multiples approaching almost 10x. Fast forward, 2021, we're seeing that multiple drop to about 5x, which is a tad closer to the average 3 to 4x that most assume. But we constantly have conversations with sellers that are primarily looking to transition. That's what they're looking to do. They're looking to make sure their business lives on. And a lot of these business owners were terrified during the pandemic. And unfortunately, a lot of them had to shut down. Family succession wasn't an option, and they didn't have the resources to carry it on. So primarily what we were doing is we were there to help them make sure that we could find that buyer that had, the strategy or resources to carry on their business, so they could sit back and be proud and see their legacy carry on. So primarily throughout, the pandemic and even up to now, and moving forward, our main goal is always to create as much exposure as possible for these sellers. And we do that by, providing a self-sufficient experience where sellers could join our marketplace, create their listing, and connect with buyers immediately. But Marc, as far as, advice for sellers, you've heard me talk about this before. We always talk about the 3 pillars. So we always, tell our sellers to stay focused on and disciplined on building not only a valuable business, but a sellable business. And sellable businesses have, great timing and favorable market conditions. They align with social, economic, and tech trends. And sellable businesses are self-sufficient, meaning they're not dependent on a particular stakeholder or whatnot. And lastly, sellable businesses have strong, healthy, organized, and predictable financials, right? A lot of sellers have to understand and appreciate that a buyer isn't essentially, buying a business for today. They're buying it for future opportunities. And what I would add to that now is you also want to build a pandemic resilient business, right? In the post-COVID world, it's going to be even more important to operate a business with strong, with a strong digital infrastructure, along with, principles and processes and values and culture that can survive and thrive if another pandemic were to occur.
Okay. And what real quick, why has the multiple gone from 20 times to, 5 times in a year? Like,
well,
that seems
10 times to 5 times. So like I said at the beginning, the assumption is that a lot of sellers are trying to salvage and maximize the value. So they were looking for those Hail Mary exits, and they were just attaching higher than normal multiples to their business, obviously lacking guidance from professionals like Keith and Morgan, because I'm pretty sure they would probably tell them to refrain from doing that. But a lot of these business owners were just trying to exit because they were just hanging on by a thread.
Gotcha. So so Keith and Morgan, maybe you can break it down into what you guys are in the business, but for the average business owner who might sell their business once in their life, they've been running it for 20, 30 years. What is M&A? What can it do? How can it help? What do they do? What are the steps? Really break it down into smaller, simpler components.
Well, I guess I can say, I really appreciate what Nunzio is doing. So Paratus, it means be ready. And that's really the focus of what our product does, is it tries to present a business in a ready state to sell. So we make sure that they've got a valuation that is correct, is probably the most important thing in terms of selling your business. I'm sure Nunzio will agree that somebody trying to sell a coffee shop for 10 times earnings is very unlikely for that to happen. So we use a market-based comparable approach for our business valuations, and we get it to the marketplace, and we use places like Nunzio to advertise those businesses for sale, and we come at it with a price that makes sense, I think, and a full information package for any buyer that wants to take a look at it and have all the answers to the questions that they may have. So that a big part of our process is getting businesses ready to go to sites like Nunzio sites, so that they're ready for buyers to acquire. I don't think that quite answered your question, but it's kind of that's the approach that we're taking there. I think the biggest part of what I'd like to say is that businesses can't sell unless they're ready to sell. And just going to advertise somewhere without the resources and background and without the information for a buyer, it'll never sell. And that's, I think, why the success rate for business sales by FSBOs or small business owners is 16% or something like that.
Gotcha.
Yeah, to add to that, Marc, Keith is spot on. Like we, as a digital marketplace, we analyze and collect all sorts of data points, and we see that listings that are represented by brokers, or listings that are from experienced entrepreneurs that have bought and sold before, or listings from entrepreneurs that have an acquisition team on hand per se, they tend to have higher success rates. So Keith is absolutely right. It's about being ready to sell and being organized to sell. It's not just flipping on a switch and saying, okay, well, today I'm going to sell my business, because most of the times it takes a lot of preparation to do that.
Fair enough. Morgan, do you want anything to add, clarify?
Yeah, no, I think that probably the biggest misconception or mistake people have going into the business for sale process, and it's not to any fault of their own, but most of the time when people are ready to sell a business, they are coming to us in a state of, can you sell this thing by Monday? And it's like a Friday afternoon after a long week of dealing with employees. The supplier called, they had some issue, whatever it might be, that is the constant battle of running a small business. And so when people are in that state, they are not going to do the upfront work to get their business ready to sell for the most part. And it's also the fact that you might just do it once in your lifetime, to your point, Marc, and they may just not know what all the steps are required. So one of the things that usually surprises people is how much effort is done in the heavy work that's done in the front of the process by gathering all the financial information, talking about your sales and marketing strategy, if you have one, your business history, your employee structure, and really outlining everything about your business so that when a buyer looks at it, they have all the information they need to make a purchase decision. That's the way we try and position the sale of a business. And a lot of people don't do that. They write up a quick blurb on a listing site. And usually that is enough to get maybe some interest, but then it all falls apart because there's time kills deals. We always talk about that. If you're late in responding to a buyer's request, or they don't understand how your business works, they're not going to make a decision to move forward, and you'll have a very hard time selling it.
Mm-hmm. Terrific. My name is Marc Belaiche. I'm president of TorontoJobs.ca and TorontoEntrepreneurs.ca. My panelist today, Nunzio Presta, founder and CEO of buyandsellabusiness.com. Keith MacKenzie is co-founder of Paratus Business Resources, and Morgan Tate is also co-founder of Paratus Business Resources. If you have any questions for the panelists, feel free to put them in the event or in the stage section in the chat, and I'm happy to moderate any questions that you might have. So one question I hear this from people who are selling their businesses, And that is, when times are not good, they say, well, it's going to get better and it's going to be better. And so hence it's worth more. And then when times are great, then they don't want to sell because they're making money and stuff like that. So is there an optimal time to sell? What do you say to people who are, selling maybe and, thinking they're going to get more than they are, but their sales are way down, say because of COVID or business, industry, economic, whatever? Open to anybody to answer.
Well, I guess I can answer that to a certain extent. The optimal time to sell isn't typically a business decision. It's almost always a personal decision. So if you're personally ready to sell, hopefully you think about that 2 years before that you're actually going to make the sale. But we call them in our business life decisions. These you may get more if you sold it if you say you had an oil field service company. You'll definitely way better to sell when the price of oil is $150 a barrel. Worst time to sell is when it's $13 a barrel. But if you're ready to sell when it's $13 a barrel, you'll probably find a buyer, and your life may be better. So I guess the short answer is that it's better to sell when you've made the most money you've ever made, but a buyer's not going to use that as the multiple they'll base the purchase price on. If you've made $400,000 in profit in 2018 and $800,000 in 2020, it's unlikely you're going to get a 4x on the $800,000.
Yeah, I wanted to add, and Keith's absolutely right. It's a personal decision, and usually, it starts with, the question: do I want to continue doing what I'm doing? Am I ready for the next chapter of my life? Am I having fun? Am I passionate? Right? These are the questions that you need to ask yourself when you want to exit. Generally, when times are hard, you're always going to have concerns or questions, but you're also in an emotional state. So you want to refrain from, wanting to exit because times are difficult, unless, it's a personal decision because you literally cannot continue to operate the business. And that's a different story, but it's a very personal decision. And also, I wouldn't, for most sellers, I wouldn't, be discouraged if you're trying to sell and you were just hit with a bad year. That's why a lot of buyers, or at least experienced savvy buyers, they want to see 3 to 5 years of financials. They want to apply some sort of, normalized projections to see, where the outliers are. Just like, Keith was saying, there are some businesses in 2020 that have done remarkable, right, because of the pandemic. Does that mean they're worth more? Like how are they going to perform in 2021 or 2022? Right? It may dip, right? And then the opposite is true too, right? A lot of restaurants have been getting hammered, during the pandemic. Does that mean, they're going to continue to see pressure on their valuation, in 2 to 3 or 5 years? I don't think so. I love restaurants. I'm sure everyone does, right? So you really have to, consider multiple factors, but I think it starts with that personal decision.
Terrific. Great perspective on things. So let me ask you this, and I hear this from people. They get a letter from a potential acquirer or somebody that's representing somebody in an industry that's looking to buy their company like them. And I know that it becomes exciting, right? I'm going to get like a $1 million payday or whatever the number is. And so what should someone do when they get a letter like that? Should they respond, not respond? Does it depend? Like, what's some feedback that you might be able to share for those business owners that are looking to that get one of those kind of letters? What should they do?
Yeah, well, I think one thing, and Keith just touched on in the previous question, is to assess: do you really want to sell? If things are going super well and your business is not controlling your life, and you feel like you have a healthy balance, why not just keep continuing to earn the profits of the business? That's what a lot of people do if they're happy. If it makes sense to take that cash off the table, maybe do something else, then make that decision first. The other thing with an offer, and we see this a lot when there is a strategic acquirer, or maybe it's a larger firm is approaching a smaller company, is the offer isn't always what it looks like on paper, or what it might sound like. So you might see a big number on there. Let's say it's $1 million. But when you start to break it down, there's a bunch of different terms and conditions in there that make the deal less and less attractive to an uneducated eye. make it to an educated eye, and an uneducated eye might not notice that, the deal maybe isn't exactly what they're going to get. And we've seen that happen a lot, and involving, your legal professional and or a business advisory service at that point, just to assess, that you clearly understand what is actually on the table before you kind of move further down the process is a really good first step that I would recommend.
Yeah, and I would add to that a little bit by saying make sure you run it by your accountant. So what the top line number is almost meaningless on an offer. It's what you keep in your pocket at the end of the day. So if somebody offers you $1 million for your company and you have $800,000 of debt on the books, and you've got to pay taxes on the difference, and you walk away with $1 million equals $100,000, is that worth it for you? So it's very, very important to understand everything about the offer. And part of our process anyway is always we say it takes a village kind of to sell a business. So we involve all the professionals all the way along the way to make sure that people are getting the right advice at the right times. And unsolicited offers are, they're kind of worth what they're, the paper that they're written on or the email that comes in. But I get the other part of that is that, everything starts with a conversation. So you don't know until you start talking to these folks how serious they are. If they may have sent out 800 letters that day. And so they're maybe not all that serious about acquiring you, and you can spend thousands and thousands of dollars preparing yourself in due diligence and they're not serious. So.
And what about, real quick, if we can spend a couple minutes on the buyer side. So for those that are looking to perhaps buy a company, what kind of 1 or 2 tips would you throw, like in this kind of market or otherwise, that are really effective to find a potential purchase, like an acquisition?
I can take that. I could kind of give sort of another summary from a buyer side that as far as what we're seeing from our marketplace. Last I checked, the average connection value. So what a buyer is willing to purchase a business on our site was about $674,000, which is still higher than normal. I had a conversation with my CFO the other day, and he mentioned that the Bank of Canada is forecasting inflation rates to hold steady until I believe Q4 of 2022, and then after that there could be hikes in interest rates. So this is important to our members, and this is important for anyone looking to buy a business, because it'll put some pressure on trying to buy a business earlier rather than later, in fear of any potential increase in interest rates, which could impact the financing of the acquisition. But I think, like I said before, we're still seeing, a ton of people moving away. We're seeing people moving away from the 9 to 5, wanting to be their own boss. A lot of people have had this taste of freedom due to working from home, and some do want to go back to the office, but some don't want to give that up, right? So even if that means going back to the office a couple of days, they don't want to give that up. So we're focused on making sure that those people understand that they don't need to start a business to own one, and we're on this mission to make sure that people know what entrepreneurship through acquisition is all about. And it kind of goes hand in hand with our advice to sellers on how to build these sellable and valuable businesses. We would say the same thing to the buyers. Those are the types of businesses that you want to find: businesses with great timing, businesses that are self-sufficient, businesses that have strong recurring business models. One thing for the last 12 months that we noticed, by no stretch of the imagination did buyandSellBusiness.com introduce the world to buying and selling businesses. You've had Keith here, doing great work, for so many years. But what I do think is fair is we've exposed many people to the magic and power of entrepreneurship through acquisition and a way to just live life on their own terms. And that's through buying an existing business or franchise.
Go ahead, Keith.
Oh, sorry. I could just add to that by, the failure rate of a startup is roughly, I think it worked out to, 5% of startups were in business 5 years after startup. When you buy an existing business, I think that numbers are almost flipped. 95% of businesses that are purchased are still in operation 5 years after purchase. So the risk reward scenario is unbelievably skewed to purchasing an existing business.
What's the number one reason a deal doesn't go through? If there's a buyer and a seller, like what are you seeing that results in the, hey, it's not going to work out?
I don't know what the number one reason is, but I think what we see anyway is once they get to the offer stage, once there's an offer in place that is accepted, or even a letter of intent or an expression of interest, the success rate of those deals are very, very high. I don't know what the exact number is, 80-90%, I would say. Very few of our deals fall apart in due diligence because we prepare the businesses beforehand for that. So there's no surprises. I don't know, Morgan's working a little bit more on the for sale by owner side of things. So maybe you can add a little bit to that, Morgan.
Yeah, well, I think one thing that falls apart maybe post-offer, the biggest one probably for a deal, for a business not selling, is not finding a buyer or being advertised in the wrong spot. But if you do have a buyer who's interested and you've come to some sort of agreement on an offer, is typically the business purchase price doesn't support the financing needed to get the deal done. So a buyer might not have the capital available, and most buyers don't buy businesses with all cash. There's typically lending that's involved, and the underlying business still has to support the lending component. So if the business has been overpriced or hasn't considered what is actually available for financing, then you get into this awkward situation where a deal can actually close because the buyer doesn't have the finances available and the owner isn't willing to lend a portion of the business to the buyer. So typically post accepted LOI, that is probably one of the reasons why it can happen.
And that's great. And for the next year, do you envision more buyers coming out of the woodwork, more sellers coming out of the woodwork? What's your forecast for the next little while?
On the West Coast, anyway, we're seeing more buyers than sellers. Lots of people, and to Nunzio's point earlier, lots of people are reconsidering their life and looking to buy businesses as a different option. So I don't know. We're probably, for every engagement that we take on, we add another 50 or 100 buyers to our database of buyers.
So it's a good time to sell then. Is that what you're saying?
I think it is.
Yeah. Okay.
And to go another direction, as far as another trend in the space, and I know Morgan's been pretty active on this conversation with me on Twitter and some other networks. We're seeing a massive increase in entrepreneurs generally building out SaaS and e-commerce businesses, and this pandemic's added jet fuel to that space. So the good thing about that type of trend is there's a ton of activity and opportunities for people interested in buying and selling SaaS and e-commerce businesses. But then the bad news is, some of these entrepreneurs are building terrific businesses, but then there's some that are building businesses in 6 months and assume the business is worth millions, while having low retention or low profit margins. And they're hooked, or their expectations are so high because they see these high profile deals, and it makes it seem like it's really easy for an entrepreneur to build and exit these digital first businesses really fast, when in reality it's still pretty difficult. But on a positive note, we're seeing really hungry buyers in that space as well. And maybe Morgan could add to it, especially some of these capital firms and holding companies that are interested in rolling up, businesses in the micro market. They're looking to really supercharge these types of acquisitions, these SaaS and e-commerce acquisitions, to build value within their portfolios. So, there's a ton of buyers doing this with Amazon and Shopify stores. And from our side, we love it. We're positioned extremely well to service this segment, in addition to not ignoring the importance of traditional businesses, because we truly believe, and I've said this multiple times to even you, Marc, that the transition of local mom and pop shops are extremely important to building a better future and stronger economy. So we provide this balanced approach, and I'm super excited. I know we were talking backstage, but I'm super excited to announce that we'll be launching a new solution in the new year that's really aiming to truly digitize and automate the buying and selling experience for all our users.
Awesome. Looking forward to it. We're just out of time, but looking forward to that, Nunzio. For sure, share it with me when you've got it done. And I want to thank everybody for coming to the Canadian Virtual Sell Your Business Conference. Today's event presented by TorontoJobs.ca and TorontoEntrepreneurs.ca and powered by Event Logic with a K. TorontoJobs.ca. My name is Marc Belaiche. I'm president of TorontoJobs.ca. Panelist Nunzio Presta, founder and CEO of buyandsellabusiness.com. Make sure to check out the website. Keith MacKenzie and Morgan Tate are co-founders of Paratus Business Resources. How did you like the event? Let us know. We'll send you a survey to complete within the next 24 hours. I want to thank all the speakers and the team. There's many people behind the scenes, Rachel, Ann, Sandra, Sarah, Carla. I want to thank everybody for being involved. I want to thank all our sponsors, TorontoJobs.ca, TorontoEntrepreneurs.ca, TE Capital, EventLogic.ca, and Gahuza, which is a new way of finding staff. It's a platform that is coming soon. And don't miss out on our other upcoming events. We've got some great events. You can visit EventLogic.ca to find out all about them. There's the Canadian Virtual CPA Firm Partners Conference, the Canadian Virtual Lawyers Conference, HR Conference, and the big one is going to be on Wednesday, November 17th, the Canadian Virtual Executive Leadership Conference. So you don't want to miss that. And feel free to connect with me on LinkedIn as well if you'd like, and subscribe to our YouTube channels. And we do tack on an extra 10 minutes now at the end of this event, so you still have some time to network through our speed networking, visit our expo, and more. And thanks for coming, and see you at the next event. And thanks again to each of you for being on the panel as well.
Thanks, Marc. Thanks, Keith. Thanks, Morgan.
Thanks.